Hey guys, welcome to Trade Mastery Live with me, Simon Davis, also known as Zone Trader. Today we're going to be covering the basics of smart money and price action. Feel free to ask questions along the way if you're live. If you're not here live, I'm going to be doing these more often, so look out for the link and we can get a few people on here, teach them how to trade smart money price action. All right, let's get right into it. Okay, so we're on Great Britain USD on the 1 hour time frame. The reason why I go on the 1 hour time frame is because it's the cleanest that's showing like order blocks, breakers, and turtle soups in my eyes after 5 years or more trading. So we'll cover an order block first, and we'll go from there. Directional biases on the daily, we know this much, but the market doesn't always have a direction, especially if it's in consolidation. But at the minute, we can see that there was a daily order block respect to push price down to reach for the lowest of lows or to reach for this daily order block. So the price will bounce around from order block to order block or sweep the lows, which is a turtle soup. Get out your pen and paper, guys. It's going to be very informative. They'll get more advanced as we go on. Oh, and this is actually a daily line, which is set up a 1 hour order block, which is very nice to see. There's a top-down analysis. So we've just gone from the daily order block right into a 1 hour order block, and you can go down into the 5 minute or 15 minute or even 1 minute on a top-down analysis and find the same trade, which is basically a mirror trade. So an order block, it's not every single up candle before the down move. It's got to be a fast down move that breaks structure, and then it leaves stops as well. So this swing high, it leaves stops. So I like to call these in between the range here to here an internal order block. This is an external order block. So I like to call these FOMO order blocks that people are trying to sell into. But this won't get respected because it's an internal order block. What do I mean by that? So the lowest of the lows are the externals, and the lowest of the low swings are the externals. So this is an external order block because this swing here, it's on the outer edge. But then this is an external order block here. But the ones that are internal inside of this range is inside the range. So therefore, it won't hold as much as the external order blocks. So like I said, an order block for bearish is bullish candle, fast move away, break structure, and then price will take out stops in between here and here. This high and this high, there will be stops that price takes out, and then price drops from there. If you miss this entry up here, you can get in on the break of the structure. This is on the hour. You can drop down to lower time frames to refine your entry. Drop down to 15-minute or 5-minute time frame to refine your entry. Or we can do that right now if price will let me. So it's the 14th of January. Like I said, guys, feel free to ask questions along the way. We are live. Please don't interrupt me mid-sentence, but I don't mind you asking questions along the way. We can get more into it, get more of the discussion going. If you have any problems or questions to cover anything in price action, feel free to ask. This is your time to ask. If you stay quiet, you won't get that much out of it. But if you speak up and ask questions along the way, then you'll learn a lot more and retain a lot more information. So we'll go down to the 15-minute time frame from the 4th of Jan. Can go down to 5, but it then gets a lot messier. So now we're looking for a 15-minute order block, exactly the same as the hour. We've just gone from the daily. This line here is your daily. So this is like top-down analysis as well as an order block. I can't help but teach it in further in-depth detail into price action by talking about this because I've done it for so long, over 5 years. Been trading this way, listening to smart money traders this way for 5 years non-stop, like literally every single day, apart from holidays. So it might look easy the way I present it. It's not at first, but it gets easier, I promise. I see a nice breaker there as well, which I'm not going to highlight right now. But this order block here, it's the same thing, isn't it? We've got the last up candle before the fast down move, price returns, and then you can get in within this range. And this would have been 64 pips. Hey guys, thanks for joining us live. Appreciate you being here.
Welcome.
Feel free to ask questions along the way. So yes, this would have been 60 pips, but it really doesn't matter. It really doesn't matter about your pips, guys. Like, honestly, one of the biggest breakthroughs I've had in trading is it doesn't matter how many pips you're catching. If people are boasting on Instagram on how many pips they're catching and they're not talking about risk to reward, then they don't really know that much of what they're going on about, because it's all about your risk to reward. If you've got a higher risk to reward, you're going to be more profitable in the long run. If you're catching 1,000 pips, it doesn't matter if someone's catching 1,000 pips or 100 pips. If the 100 pip person, the person who's catching 100 pips, catches more risk to reward, they'll make more money than the person catching 1,000 pips. It doesn't matter at all. And what do I mean by that? So say you got in this trade here on a 15-minute time frame, and you put your stop loss, which is stop loss here, at the very, very high. Say you didn't refine this and you traded the hour, for argument's sake, and your stop loss was 33 pips in this example. Then each line here is 1% if you're risking a percentage on your account, or 2% or 3%. I recommend 1% risk, then that's 1% gain, 2% gain. But that's 33 pips. Okay, and that was 68 pips. It went further, so it was 68 pips to 2-to-1 risk reward. Okay, but let's say you didn't have a 33 pip stop loss. Look what happens if you lowered your stop loss, because we've refined our entry here. So now you're talking, say, a 15 pip stop loss. Right, let me just if you're not talking, guys, turn your mic off. I really appreciate it. Thank you. Okay, thank you. I'll throw in psychology along the way, like I am. So we've got I think it might be, yeah, cool, got you. Silence. Right, anyway, so like I said, if you had a 33 pip stop loss, you would have had a 2-to-1 risk reward, and that would have been 2% in your account. But if you lowered your stop loss, and say it's like 15 pip stop loss, then as you can see here, the 2-to-1 risk reward now turns into a 5-to-1 risk reward. So you're making 5% on this trade, not 2%. So it doesn't matter if you catch 1,000 pips or 100 pips. If the guy catching 100 pips has got a better risk reward, they're going to be profitable overall, way more than the person who's catching 1,000 pips, who doesn't know anything about risk reward and has a big stop loss and catches low risk reward. Okay, so that's order blocks, risk reward covered. And this is for free. Imagine what our membership talks about. And I think some of you guys on here today know about that. But we can change lives for free, no problem. It's all about giving back. So a few more order blocks along the way would have been this one, which didn't get respected. So we drop down to this one, then it does get respected. It's just the last up candles before the fast down move. So this one here would have been a small trade, but if you drop down to lower time frames, refined it, you could have got a nice risk to reward in this trade here. Then we're on to talking about turtle soups. So I'll take off all this. which is a run on stops. Call it for what it is, guys. It's a lot easier in your trading if you call each move what it is. So a turtle soup is just a nice fancy name that someone named it, called Inner Circle Trader ICT. But it's actually a run on stops. And if you tell yourself that, then you're going to be more, what's the words? You're going to want to use it more and understand it more because you know exactly what it is and you're not just calling it a fancy name. So there's a high here, and then this high gets ran by this price action here. And this is your turtle soup. It's not a turtle soup, guys, until price comes back into the range, and then you start refining your entries for a sell once it comes back into the range. Because if you're trying to trade a turtle soup above this high, so imagine loads of stops here actually as well. So they're running out all the stops. This is just a risk reward thing, but I'm just putting it for lines. So the market makers, inverted commas, see all the stops here, they get ran. Price comes in to your turtle soup run on stop area or a stop hunt area. When price comes back into the range, then you start looking for sells. That's a turtle soup. That leads on to a breaker. In no particular order, but maybe they are. So then you've got your breaker. So I hope you understand turtle soups for now anyway. We won't move too fast. We'll just try and go a bit slower. Yes. So your turtle soup is the run on stops. Price comes in, price comes out the range. So over, takes all the stops, comes back. Like I said, guys, don't try and trade a turtle soup without it coming back into the range, because if you do, then it's not, 9 times out of 10, it won't turn into a turtle soup and keep going and going and going. So people who are unexperienced will try and trade turtle soups. Say, for instance, they'll think this one could be, but it never pushes back into the range, so it never did become a turtle soup down here. So that's order blocks, turtle soups, and breakers. I'm going to talk about breakers now, which I've just highlighted here. The reason why I talk about order blocks, turtle soups, and breakers is because that's your framework to becoming a smart money trader. That's the 3 most important setups that you can use in different variations across different time frames in order to enter a profitable trade, a high probability trade, and like we talked about, with the smallest of stop losses to increase your risk to reward. So we have a high here. Let me just delete our turtle soup. And we are recording, which is good. So we have a high here and a high here. So you got a high, and let's not include this one. So we've got a swing high and a swing high. Can anybody tell me what this candle would have been called at all before it was broken?
I think that would be an order block, I think.
Yep. But when it gets broken, it turns into a breaker. So it's no longer an order block because it's broken. It's a breaker now because it's broken. So it's the same characteristics of an order block, but it gets broken. So a broken order block most of the time becomes a breaker. So once the price has broken the breaker, here we didn't have the best return, to be honest. Normally we get a better return into the breaker, and then down we go. But this breaker here actually set up this entire down move until today, because it's below the structure of the breaker. And then what do? We look for a strong, for reversal, breaker or order block to be failed again. This isn't the best breaker to look at either, because there's no lower low on this side. If there was a lower low on this side and this is a lower low, price can do one of 2 things. Well, one of 3 things actually. It can continue lower and never touch this and never respect it, and eventually be filled with a further either fill in fair value or imbalance, which we'll get into in future videos, future lives actually. So this is in my vocabulary a potential order block or a potential breaker. See, this is like the building blocks of trading smart money. Fast move away from the order block or breaker. So this is the scenarios that happen. I think this is too detailed for free, but I don't care anymore. I want to help you guys. If it's too basic, it might get better along the way, but if it's too basic, you could always join our weekly lives that are membership weekly lives, which we go into way more detail into what we're talking about here, but this can help you with your building blocks and help the building blocks along the way, and will give you the building blocks to help you become a profitable trader in your career if you're serious about trading. So this is either, like I said, a breaker or an order block. This is the scenarios that happen. The three scenarios will carry on down and never come back, or it'll come back, get respected and drop, or become a breaker, respect the high of the breaker and continue higher, fill in fair value and imbalance, and reaching for stops above market, which is equal or triple highs. So these are scenarios that can play out within this Thursday. Not on Thursday, but what could happen. These are the three scenarios, so that's what you look for. Hope that made sense. Trying to go slow, clean and clear for you guys. So this is what you can look for. It's not just one candle. It's not just a one named candle. It can be anything. And the way market moves around this candle is then it becomes that certain candle, either a breaker or an order block. So there we've covered bearish order blocks. Bullish order blocks are exactly the same, but the opposite. If you're getting value from this live, guys, I'd really, either live or recorded, I'd really appreciate it if you would tag Zone Trader in a story, either screenshot or record a little small video of the video you're watching or live, and drop it on your Instagram stories for me. I would really appreciate that if you are getting value from what we're talking about here today. The basics of price action. Trade Mastery Live 1, episode 1 of many, guys. You'll hear my voice a lot more over the next few weeks, months, and this year. So stick around because there's a lot to learn, and if you ask a question, then you'll learn more. There's only so much I could just rant on about price action, rant on all week, but I'd really appreciate that, guys, if you tag Zone Trader in Instagram or Instagram stories. That'd be really, really appreciative. Thank you. So the bullish order block is the opposite of a bearish order block. Fast move away from the last down candle, price comes into the range and you can buy from here. And like I talked about, risks to reward. If you lower your time frames and enter on a smaller order block, turtle soup or breaker, then you can lower your risk and gain more reward. This was a 58 pip move. This is still an order block, but it's a big wick, so it's not the best, but it still pushed price up. And what did we do? Like I said, we talked about this before. It ran the highs and continued lower because price is pushing lower from the daily order block that we talked about before as well. So this would have been a fake turtle soup. It didn't hold. There's ways to get out of being in fake turtle soups with another indicator that we use in our full membership, which gives confirmation that this won't hold. The best ones that do hold break structure, and just look into that. And a bullish breaker is, I mean, this didn't fail at first. This is actually this was a respected order. It did turn breaker in the end. So you may have broke even or even lost a trade on this trade. But it's all about making your losses small and your wins big. And I know that's cliche, but it is. And also, never hold on to a losing trade, because that's the one thing that will destroy you, as well as not being able to trade at all and dying from 1,000 cuts, dying from 1,000 little losers. But if you're dying from 1,000 little losers, you should definitely not be on live account if you're dying from 1,000 losers. And also, you shouldn't really be on a live account if you're letting your losers lose. If you're not losing with pride and with joy, to be honest, because you've got to accept your losers, and then the winners your winners will add up themselves. So here, bearish breaker. We have a low, lower low, the failed order block. It was respected at first, but then it failed because it got broken. So this becomes a support. And then you look for lower time frame orders, total soups, breakers, or order blocks inside of here, which is the end of the day, which takes you through to the next day. And that would have been 70 pips from wherever you got in at. There was 70 pips available within that range. Price then sweeps all the stops again. And there is liquidity below the lows. Price broke all the liquidity, and it came back to things that people say don't work, not mentioning any names, and ICT order block for a bullish order block to trade a bullish move from there, and up we go. So it's always just the bottom candles, the bottom white candles to trade from. If they're returned to, see how price reacts to it and enter accordingly. Thanks, guys. If you don't have any questions, then that'll be the end. If you have any questions, I'll be glad to talk on. It's totally up to you. Hope you enjoyed the show so far. But if you have any questions, feel free to ask.
Simon?
Yep.
Hi, God, just remember I've got the mute button.
Oh, hey, Terry.
Hi. On the example that you showed there, would it be advantageous to put in the moving averages that you have on your template? You know, you utilize I think it's the 12 and the 51 moving average.
Is that a joke?
No.
I don't use. You can do, but I don't use moving averages.
Okay, no problem then.
Any other questions, Terry?
Absolute multitude of different questions. I've been sticking to what you did on our last session, and it's worked no end for me. I'm up over 10%, just sticking to what we talked about last week.
Which was that? The billionaire pattern, or?
The billionaire pattern, but just stick to one time slot, not being in front of the screen.
Oh, okay, yeah.
It's worked so well. I want to get online and just thank you from the bottom of my heart. It's really saved my psychological well-being, and it's like you said, there's some cases where I was happy to lose because I looked at it the right way. It just wasn't my trade.
That's it. It's not you losing a trade. It's just the trade losing. Don't take it personal, because the market's not going to take anything personal. Yeah. Is there noise back there, Terry? Because it's quite noisy. I don't know if it...
I just got the last end of this. I was actually doing a little bit of shopping. So I've actually pulled away to it. I'm actually listening to you in a busy cafeteria with my phone plugged in, and lucky enough I've got my earmuffs so I can listen to you without shouting. So yeah, I'm actually in a cafeteria, busy one, and I just caught the last bit of it. So
fair enough, no problem.
That's how important you are.
Oh, thanks.
Shopping was cut short because of you.
Stop everything and listen. Listen, learn, grow, and develop as a trader. Yeah, that's what I'm all about. Helping people.
Yeah,
Simplicity is the
Yeah.
key. Definitely.
yeah.
If anyone
And
doesn't have any
definitely-
questions, guys, I will end the show. If you have any questions, feel free to ask, and we can talk about that
Quick one before you go. When's going to be the next pro trader session?
tonight. Get
Brilliant.
ready for
What
that. It's
time?
going to be fire.
Simon.
Time between 7 and 8. I'll just drop the link in the group.
Oh, you're a star, mate. Thank you.
That's going to be fire. Got some good
Okay.
information to share with that one.
And then I want to ask you a question offline. So
Yeah, feel free to drop me a question because I'll answer within the next 10 to half an hour. The longest it's ever been is like 2 hours. I'm always there to help anyone ask a question, free or in the paid membership, which is a one-time fee. You'll never pay a monthly fee with me. Once you're in, guys, you're in, and you're a trader, and we won't stop until
If you're listening, guys, this is better than shopping. You can pay for your shopping with. You can literally pay for your shopping by listening to this, guys. It's
pay
brilliant.
for your shopping. Yeah, you probably could actually. All right, guys.
See you later, mate.
All right, see you later.
Bye. Bye.
Thanks very much for joining us live, guys. Really appreciate your time. And if you drop the if you tagged us in an Instagram story, really appreciate that as well. And I'll also it'd be beneficial for you in the long run, because I can give you more. I can definitely sort out some more discounts if you help us along the way as well. Spread the word. All I ask is if you tag us or share with a friend, and join the next one. Well, thanks very much for joining us live. I've been Simon Davis, also known as Zone Trader, and this has been Forex Mastery Live. Well, Trade Mastery Live for free. And as always, trust your edge, be patient, disciplined, manage your risk, and always follow your rules. Bye for now.
Thank you, Simon.
Cheers, guys. Thank you. Thanks, Job. The recording will be up on YouTube shortly. Bye-bye.